Welcome to the Real Money Show 2022. Happy to be back. My name is Jeremy Wiseman. I'm joined here by Paul Wiseman. Two of us going coast to coast on this show today, and really looking forward to discussing what we're going to be seeing throughout 2022. Before we do that, I think, Paul, it would be good to have a quick review of what we saw in 2021. The number 18778 silver. Got to get back into the groove here. And the website guildhallwealth.com. So let's just quickly talk about what we saw throughout 2021. And then that'll set us up for some discussion about what we're going to be seeing in the metals market as well as across the economy for 2022. So, first off, Paul, in 2021, the precious metals were essentially underwhelming in terms of their price performance. I'll give you some data on that. In 2021, gold was down 3.5% in US dollars and 4.1% in Canadian. Silver was down 11.5% US and 12% Canadian. Now, that's out of context. We're going to add some context to that in a few moments. But I want to start by saying or asking, what would you say to someone who may be frustrated? They're looking at their portfolio, they're thinking about their resolutions, they're doing a quick review, and they see these type of numbers. Maybe they're feeling frustrated and down. What would you say to someone who might be feeling a little underwhelmed by the lackluster performance of 2021 on the metals?
Well, first of all, I don't like to see anything go up like a rocket ship. I don't like to see things go up, because if they go up rapidly, they come down twice as quick.
Sure.
Everything has been on fire for the last 4 or 5 years, in actual fact, because of low interest rates. But eventually, all fires get put out. Whether it's the stock market has been on fire. A good example is cryptocurrencies has been on fire today. Bitcoin's almost half the price of what it was, a couple of months ago. If you look at the cannabis market, that was way, way on fire, and that's really in the gutter right now. And there's lots of companies in that business looking to get out. If you look at real estate is still way up there. But again, with the way COVID is behaving and the way the governments have been handling this COVID situation, there is going to be some people losing their jobs. When you see the market down, whether it's 3-4%, you have to look at the market and say, why was it down?
Yeah.
Because it's like piston engines. Everything goes up, certain things go up, other things go down.
Right.
Gold and silver has been around for thousands of years. It's real money. The ratio between gold and silver right now is very high. At one time, it was 16-1, 16 pieces of silver for 1 piece of gold. In 1971, it was 16 ounces of silver to 1 ounce of gold. We're in the 80-1. 80-1 ratio, which means it's so undervalued. Now, when you look and say, why is it undervalued? Because somebody pushed it down. The shorts in the market, what was sold in 2021 was not physical product. We didn't have thousands of customers coming knocking down our door. I want to sell my gold and silver. It didn't happen.
Yeah, there was virtually nobody sold anything.
Right.
That didn't have to sell for any reason or other.
They realized that gold and silver is that insurance policy against your currency. Now, if you look at today, the economy, inflation is anywhere, whatever you want to pick a number on the dartboard. It could be 7%, it could be 15%. I would go with 15%. So for every $100,000 that you may have in the bank, your buying power has just been reduced by 15%.
Right, and that we'll get into the devaluing of the currencies. And I think, I think where you're going with that is essentially whenever you see the market maybe not performing on your timeline or not up to your expectations, it's always good to review the fundamentals. The fact that gold is money, silver is money. They are a preserver of wealth. They are a store of value. And right now the currencies are being devalued, obviously at a rapid rate as we move into 2022. And you want to look for places where you can store value, and that's what the metals do. Here's some interesting facts for those that may not have been impressed with 2021. Over the last 20 years, gold is up, in Canadian dollars, is up 411%. That's 20.55% per year. That's a pretty good hedge against inflation and making sure that your purchasing power is retained. Silver is up over the last 20 years in Canadian dollars 269.73%. That's just shy of 13.5% a year. Again, for those who understand long-term holding of precious metals, and that doesn't mean a generation, it means that in a 5-year span, a 10-year span, you will see that gold and silver deliver on what they're supposed to do, which is to be a store of value. Now listen to these numbers, Paul, in terms of a 3-year perspective. Gold between 2019 and 2020 was up 43% in US dollars and 35% in Canadian dollars. And in 2021, gold was down 3.5% US and 4% Canadian. So what you have over a 3-year period is a net gain of just shy of 40% US and about 31% Canadian over a 3-year period. So again, 13%, 10% gains on an annual average. That's pretty good. That's what you're supposed to be looking for, isn't it?
Yeah, absolutely. And, because where the price of gold and silver is right now, it's a kicking off point to start to make money. This is basically, I think we've bottomed out. When COVID started, we had a low of $11.60 silver. It went up to $29. Gold went up to $1,893. We're trading right now at about just under $1,796 gold. Silver is trading at $22.40. So even if you bought silver at $11.60 beginning of COVID, you did pretty well.
But could you buy it at 11?
You couldn't find it. That's the problem.
I tried to buy it. I couldn't buy it for less than $17.50.
Well, there was the problem was once COVID started, there was no product available, and even now we're at a slowdown. We're on back order. We're about 6 to 8 weeks behind on deliveries of gold and silver, and I'm paying in most cases for that gold and silver. Because the US dollar got strong over the last couple of weeks, I've been paying 4 and 5% extra on the FX, which tells you eventually the US dollar is going to weaken and gold and silver is going to go up like crazy. And I think it's one of the best investments. It's a safe investment. You don't day trade your house. You don't have to day trade a hard asset like gold and silver. You buy it, you store it, you hold it, and sit back, and that's your insurance policy on your wealth.
Yeah, and that's not to say that you can't trade it. We get phone calls. I think I had about 2 last year where people said, "What's the price today?" Well, if I sell it tomorrow, how much will I lose? And because there's a spread, there's a premium that you're paying for the precious metals. And the response to them is, well, if you don't want those premiums, then you can trade it on paper. You can buy an ETF. You can do something where you can take advantage of those price swings. That's a trading mentality, and that's perfectly fine. But if you're looking for a way to protect your wealth, you have to own the actual physical, right?
Yeah, if you're trading gold and silver, the only way you can win at that game is if you're an insider. If you really know what's going on in the market and you're being tipped off when, they're going to sell off the longs, they're going to smash down the shorts, that's the only way that you can make money, day trading or trading gold and silver. Well, the thing is, you're buying the physical product. You're
Right.
buying something. You always say when you see a spot price or the paper price, it's the cotton in a T-shirt. It's not, or a shirt. It's not the finished product. To finish a product, it takes time, money, and that finished product, there is some cost involved. So when you're buying physical gold and silver, it's fabricated, it's made, whether it's a 1 ounce silver coin or whether it's a 10 ounce or a 100 ounce bar, that originally had to come out of the ground, had to be transported, had to go to a refinery, all the impurities taken out of it. It's then, sent over to a mint that, make whether you want a maple with a queen on the front and a maple on the back, there's a cost involved. There's insurance, there's charges for your staff, your delivery. I mean, everything that goes in
To a retail product.
To retail that product. Yeah. But it's not it's not like buying a toner for a cartridge for a printer, which costs like $6 and they sell for $100.
Right.
You know, gold.
Yeah, there's a
comes out
low
of the ground.
premium actually between the cost for the
Yeah.
product out of the ground and what you can get it in your
Yeah,
hands
we're
for.
working on oxygen in most cases. I mean, you know, the markets move up and down. We have to have product at Guildhall. We store product. We basically have three inventories. We have a static inventory. We have an inventory that's going out, and every ounce of gold and silver that we sell, we replace so that we always have inventory.
Right.
When we put product on our website, we don't have 200 SKUs and don't have any of the stock. Everything that you see on our e-store, we have in stock.
So we have a retail product. You have to, you know, there's a cost to acquire that retail product, a cost to fabricate it, purify it, refine it, get it into the shape of the bar that you're buying. But the best part about gold and silver is, you know, there's blood, sweat, and tears. There's all those costs to get to that point where you own 99.99% pure gold, silver. But then the value is stored. That's it. If you need to change that gold 1 ounce into something else down the road, it's very easy. I mean, you can hold an ounce of gold in your hand and within a minute you can start to move it. It's that malleable. So the energy stored in that metal is there forever once you have it. Whereas, for instance, with currency, with like a paper currency, you have to replace that over time. You have to burn the cotton, replace it. And then with crypto or a digital currency, the energy is constantly behind that because you have to turn on the switch. By the way, I don't know if you watched what's going on in Kazakhstan, but the internet's down there. I mean, they have no internet there. So if you had crypto, you're done. No, can't use it.
There's 2 poles and a wire anyway.
The number 1-877-8-SILVER, the website guildhallwealth.com. We'll continue this discussion on the other side of the break. You're listening to The Real Money Show on Global News Radio, 640 Toronto, and we'll be right back. Welcome back to The Real Money Show. The number 1-877-8-SILVER and the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Paul Wiseman, and we're talking about real money, physical gold, physical silver. In the last segment, we just kind of quickly reviewed what happened in 2021. You know, the market didn't do a whole lot, but when you look at a slightly larger perspective of, let's say, 3 years, almost 40% US, over 30% Canadian, that means you're averaging 10+% a year. That is a great hedge against inflation. Silver, over the last 3 years, we're up 51%, 17% a year in US, up just over 40% in Canadian, which is just shy of 14% a year over the last 3 years. If you spread that out over a 20-year period, you're looking at 20+% gains on average for gold, 13.5% gains on average for silver. Silver being very undervalued right now. A lot of room to grow. We'll get into that a little bit down the road. Now, here's something interesting I want to bring into a discussion for you, Paul. You know, last year when we had the silver squeeze, you know, in 2020, you had in the last segment, you were talking about what happened in March. Everyone was panicked, wanted to get their physical product, maybe wanted to take delivery of physical product if they had an ETF or some sort of gold-backed fund. And the retail market got zapped, no product. We saw that again last year, at the beginning of last year in February with this quote-unquote hashtag silver squeeze. And, you know, lo and behold, JP Morgan was able to source the metal to provide to the ETFs so that they didn't default. Interestingly enough, in a year where the prices of metals didn't look like they did a whole lot, Rafi Farber, who does a weekly update on the metals through Arcadia Economics on YouTube, put out a video this week where he was talking about since last February on the commodities exchange, they are down 70 million ounces of silver that have been pulled off that exchange over the course of the year. So while the price of silver has come down over the course of 2021, the physical silver has been taken off of the COMEX, and the amount of investment interest in the ETFs has not diminished. What does that tell you?
Well, it's all about supply and demand. It's all about skullduggery. It's all about manipulation. And I just feel if you hold gold and silver, you know, gold is for your golden years. Gerald Celente always says that. You hold on to gold and silver, whether you take it home, whether you put it in a secure depository like we store with, you know, Brinks or IDS Canada, whether you put it into a registered account, an RSP, a TFSA, a LIRA, whatever you have, you can put gold and silver. We partner with Questrade. You're buying physical product. And getting back to what we said in the first segment, if you were listening, yes, you can trade gold and silver. You can buy futures. You can buy options. The problem with futures is if you bought silver, as an example, at $20 and they smashed it down to $11.60, you're in a margin call and you've lost your product. Whereas when you have gold and silver and it's physical, the only thing that can happen is the price can drop down, but you still own that gold and silver. And guess what? It always goes back up again after they smash it down.
Here's an interesting thought for you. Ted Butler, who those who know in the silver market is one of the all-time longest standing gurus in the market. Some people maybe question, they have some arguments with him. Okay, fine. But, he's been doing this for a very long time, puts out great articles. He put out an article in the last couple of weeks saying that there used to be what they called the big short in the market. So they would say JP Morgan holds the most amount of short positions for silver in the market. He put out an article recently, Paul, saying that torch has been passed to Bank of America. I believe it was Bank of America. And they are super short. And every time the price of silver moves up $1, they lose $800 million.
That makes sense.
What would happen if the price of silver were to move up $5? And remember, this time around, they don't have the JP Morgan stockpile to cover for the physical metal being put into the ETFs or being drawn off the COMEX if the price were to rise. So if the price were to rise this time, how are they going to tamp down the price with a major bank short, huge on the metal, losing 800 million every time the market rises a buck?
Then what happens? The bank scrambles to buy every ounce of gold and silver that's on the market. And this is what happened 2 years ago.
Yeah.
One of the banks, were no longer in the bullion business, and whether they had certificates or lending the product out or renting the product out or leasing the product out or doing whatever they did, had to scramble when they got out of the business to get the product into different depositories for their clients. You can't do that overnight.
Right.
You can't get millions of ounces of silver. You can't get millions of ounces of gold. It's not out there to buy. We are, right now, it seems to be about 6 weeks behind with deliveries, though we have product, but we're always ordering ahead so that we have product for our clients. Our clients don't have to wait unless they turn around and they want 1 million ounces of gold. That's going to take a little bit of time to put together. Mm-hmm. You just can't get the product. There's only a certain amount of mints, and the product has to be LBMA approved. Do you want to buy gold from Ghana? Is it where they always call us from, Ghana or wherever, one of those countries?
We always get a call from Ghana saying, hey, I've got this gold I've mined. What do I do with it? Go to a refiner. I was listening to this YouTube thing with Michael Saylor, who has a advice company and has done quite well, I guess, over the years with crypto. And he was trying to get people into Bitcoin by saying that if gold is low in supply, they can always just mine more. And I thought, that's absolutely ridiculous. It doesn't work like that. There's only a certain amount of product that can come out of the ground every year, and I think it's to the tune of adding to the stockpile at 1.75% or something like that per year. It's a very low number. And to your point about being 6 weeks behind, that if there is a shock to the market, let's say everyone realizes, we don't trust the Fed, they're not going to control inflation, which translation, by the way, means the dollar is devaluing at a rapid rate. Our money system's dying. We can't get the value of our dollar. We got to get into physical silver, and the retail market gets wiped out in a short order. Let's say we've seen it happen twice in the last 2 years. It took 2 weeks, less than a week, or a week to 2 weeks, and you were out of product. Now you can order new product. Okay, the wholesaler can order new product, but the refiner isn't going to be able to get that new product to you ASAP. It could take them 6 weeks 2 months, 3 months. At what point? There is a limit there at which a refiner will say, I can't take any more orders for you. I can only deliver so much at this price. Only take that away. I can only deliver so much at this price. Add to that the mining companies. The mining companies might say, and we're talking about if the price were to drop, right? The mining companies could say, I'm not delivering any product at this price. I'm just going to hold on to it.
They stop mining. I mean, if it cost, as an example, $18 an ounce to mine silver, you're not going to sell it at 16.
Right.
And the costs are going up for everybody in business.
Yeah.
Canada is very expensive to do business. They put up even this, Canada pension, unemployment insurance has gone up.
Yeah.
You're paying more. The companies are paying more. Insurance just generally is more. The cost of gasoline is 50% higher, almost could be 100% higher than it was last year. I'm not sure. The government is still getting their HST. You don't hear a word about how much money they're raking in on extra taxes, but they're giving money away like crazy. I mean, they don't have any. The thing is as well, Canada doesn't have gold as a backup.
Right.
It doesn't make sense. We mine gold, we mine silver, but we don't have any. We just give it and sell it away. It doesn't make any sense.
Well, there's a lot of things that don't make sense right now, right?
But anybody that's printing currency, I don't care whether it's Canada, I don't care whether it's US, I don't care whether it's the euro. They keep printing. You take countries like China and Russia, the central banks are buying gold and silver. They're sitting back and waiting for a collapse. They are literally sitting back. It may not happen tomorrow, may not happen in 5 years, it may not happen in 10 years, may not happen in my lifetime. But you can guarantee they are buying gold and silver for their central banks because they know currencies will eventually collapse.
Right. So here we are. What we were just discussing is basically saying that you have a low risk entry point for the precious metals. And most people will continue to just stack those metals for as long as they can at these prices, because those who are savvy enough, who have already been buying, those that are new to the market, don't know yet that this market can be zapped, gone, no product available. So it's not a good time to just sit back and wait and say, well, if the price of silver gets to $35 an ounce, maybe I'll throw some money at it. That's not going to help you anymore. But those who have been buying and continue to buy, they lick their lips at these prices. They get excited at these prices. They're happy to just be able to continue to stack. Where you were going with this, Paul, is 2022. As the pandemic will eventually be in the rearview mirror, we hope. I mean, tyrannical governments aside, or you want to call them stupid or foolish, who knows? But that'll fade to the back, and then you are going to be left with what has occurred in the economy over the last several years, right?
Yeah, I mean, governments don't seem to care about future generations. They leave the debt, and the debt's going to be left behind for somebody else to clear up. It's hard for countries to go bankrupt. They can't go into Chapter 11, though they come up with some way where, they in the States in the 20s, they confiscated gold and revalued from $20 to $35 overnight.
Right.
And
but it was a different time, too. People trusted the government. The dollar was backed by gold, right? People had faith that the dollar that was in their pocket was backed by gold and as good as gold.
That's where that saying comes from, as good as gold.
Right. And they also received money for their gold, so that it wasn't, and people didn't have debts. The other thing is that the government has done such a good job, governments and central banks have done such a good job of enslaving people through debt, whether it's been through silent killer of inflation, taxation. People don't realize their wealth has already been confiscated, and people don't own gold and silver like they used to.
Yeah, you really need to have some gold and silver in your portfolio. Even if you're a small investor, a first-time investor, go to our e-store, go to guildhallpreciousmetals.com. You can buy gold and silver. You can have it delivered. You can come pick it up. There's several ways to pay. You can pay by e-transfers. You can pay by debit. Pay by cash, not more than $9,900. We have to report you to the government if you want to buy thousands of dollars worth of gold or silver. But it's a great way to own gold and silver to start off with. You can put the product, if you don't want to take it home, you can put it in our depositories, whether it's Brinks or IDS Canada. They're both IROC approved, safest place to keep your product. You get the bar numbers. It's safe, secure, it's segregated, allocated. If you don't have a TFSA, it's the best vehicle in the world to own gold and silver. That is a tax-free savings account. We partner with Questrade. We can put you into gold and silver. If you've never owned a TFSA, I think you can put almost $80,000 into it today. And the price of silver being, $22 and change, I think you could easily see $30, $35 by the end of the year. They're calling for gold to be $2,100. And again, when you look at the price of gold, it's because the dollar's been strong, so gold has been a little weaker. But weaker dollar, inflation, major tensions between countries, this could put the price of gold and silver really through the roof in 2022.
And we'll continue that discussion right after this break. You're listening to The Real Money Show on Global News Radio 640 Toronto. The number 1-877-8-SILVER. The website guildhallwealth.com. Stay with us. Much, much more. Back to The Real Money Show. The number 1-877-8-SILVER and the website guildhallwealth.com. Starting to cover a lot of topics coming at you fast here with a lot of the things that are going on. One of the themes for 2022, Paul, I think that we've consolidated in precious metals, as we've discussed, that this is a low-risk entry point. Premiums being high in the market as they are is just an indication that there's a lack of physical supply and very strong demand. Again, the ETF hasn't come down in demand. Physical supplies continue to be drawn off of the COMEX. And so this market feels ready to explode. Add to that, so that on its own, add to that, you've got an increase in inflation, right? You've got the Fed absolutely cornered. Are they going to take away the punch bowl and no longer feed liquidity to the bank? Do you know that the Fed right now on their balance sheet is closing in on $9 trillion? And this is something that I'm also noticing as sort of an echoing. I feel like we're coming back to 2018 when the Fed started to taper. They said, finally, okay, we have to do something. We have to maintain credibility. We're going to have to start tapering and start think about raising interest rates. At that point, pre-taper, the balance sheet on the Fed was $4.5 trillion. They're now at $9 trillion. The debt in the U.S. is closing in on $30 trillion. They've increased the debts so much over the last year and a half, 20 months, that people are going to look up and realize this is the problem. There's no transitory inflation. Fed's already walked that back. We know it's not transitory. We know that this is a case of you've printed all this money and you've devalued our dollar and you've screwed us. How are we going to protect ourselves? Don't you think it's just a matter of time before people really start to hammer into the metals? Because, what's the expectation here, Paul? Do you think that people sit there and say, Dow was up, double digits last year. It'll do it again this year?
Well, they've talked people into real estate. Then you got what happens when people get fired and they can't pay their mortgages. That's what happens as well. But you're going to see interest rates rise 1%, 2%, 3%. In the 70s, I saw interest rates go to 22%.
Right.
Can it happen again? Of course it can.
It can, but the question becomes, is there a desire to do that? Don't you think the Fed and any central bank understands this? And we know there's a coordinated effort, right, amongst the central banks. They raise 1%, they're going to tank the economy. They know that. Even if you go back to 2006, when I started in the precious metals market, every meeting, Greenspan raised the interest rate a quarter point. And the price of gold might go down on a day, it might go up on a day, but overall it just kept going higher, the price of gold, because it meant that over time they were raising interest rates, therefore they were fighting inflation. What? They're fighting inflation? We have an inflation problem? Let's buy gold. Today, I don't think the Fed or any central bank can really raise interest rates significantly to put value back in the dollar. Don't you think the genie's out of the bottle in that sense?
No. There's going to be 3 rate hikes in 2022 in the U.S.
But how big?
they'll start off a quarter, maybe a half, and then they're going to start, when they get really into trouble, they're going to have to do ones and twos, because that's what's going to happen. You can't, sooner or later you have to pay the piper. And you've given people free money. COVID is going to be the excuse for everything going sour. It really is. It's going to be the excuse for government saying, well, if COVID didn't happen, we wouldn't have given all this money away to people. We wouldn't have had to, give all this medical care and all this and all that. It's an excuse. It's a head fake.
You're saying people suffered through this for 20 plus months, and now they're going to suffer through the economic
No, they feel
fallout.
good because their house has gone up 30, 40,
Right.
50%. The stock market is up 30, 40%. The real assets like gold and silver have done nothing last year. Over 2 years or 3 years, we're still up 30, 40%, but not, it's physical product. You have to buy it. You have to store it. You have to keep it somewhere safe when you buy gold and silver. A piece of paper you put in the drawer, and you hope that it's there.
You hope that there's no counterparty risk and the other party doesn't fall.
But, people are getting nervous. They're buying gold and silver. They're taking it home. I don't care whether they bury it in the back garden or they put it under the mattress. It's a little lumpy. But people store. They're terrified of, especially people from Europe. They've seen economies fall, break down, collapse. And we keep printing money in Canada. We keep printing money in the US. It's going to collapse.
Yeah, I think.
And I don't want to be someone that's preaching gloom and doom, but
You're teaching preparedness.
But just have something in gold and silver put away, whether it's 15, 20% of your portfolio. Hope real estate goes up 500%. Good luck to you. Hope the stock market keeps going up and up and up. But the reason the stock market keeps going up and up and up, because companies are buying back their own stock.
And the Fed's adding liquidity.
Yeah, and then you've got, I don't want to say the governments buy stock and try to keep the market going, but I'm pretty sure they're hand in hand with some of the big houses that manage very, very large portfolios. Because they seem to get away with things that we can never get away with, in manipulating gold and silver. Gold right now.
Well, this comes down to the thing with the manipulation of the gold and silver. Here's the bottom line. Last year, when the silver squeeze happened, you had J.P. Morgan able to come in with a whole bunch of product to be able to stave that off and then also get the market down. Now here we are. The market is already consolidating off the bottom. There's that much less product available for these gigantic entities to be able to save the day, and the demand for the metal hasn't let up over the course of the year. So the takeaway is that if there was any sort of black swan event where people start to get into the metals again, it's done. The horse will bolt from the station, and this thing's going to be a rocket ride because there's nothing that's going to be stopping it.
Yeah, but the thing is, last year we saw the spread on silver as much as $5 an ounce. That's US, $5 an ounce. Silver Eagles, $8 an ounce spread. Now, you can have the product. If you sell the product and make the spread, you're doing extremely well. He who's got all the toys is the winner. Right. And you look at these, banksters, and whether it's J.P. Morgan or other people in the bullion business, that control the markets and deal in paper as well as physical. It's great, to go short the market, smash it down, and then you buy the physical product at a lower price and keep storing that physical, because eventually it's going to go through the roof.
And that's where we are. The number, 1-877-8-SILVER, the website, guildhallwealth.com. Give us a call. We're happy to talk to you about how to acquire physical precious metals in your portfolio. You can start at our website, guildhallpreciousmetals.com, and pick up a few ounces, 10-ounce bar, tube of silver maples, maybe a 1-ounce bar of gold. And then we also have depository storage available. That's providing liquidity, allocated, segregated. It's your physical product. You have the direct ownership, no counterparty risk. And then you can even do that same sort of acquisition within a registered account, RSP, TFSA, Lira, LIF. We'll talk about who's getting involved in the market in the next segment. You're listening to The Real Money Show on Global News Radio, 640 Toronto. Back to the Real Money Show, the number 18778 Silver, the website guildhallwealth.com. I'm just going to take a breath for a moment because
I'm going to ask you a question,
we are both
Jeremy.
quite passionate about this market.
I'm going to ask you a question.
Yeah.
Who is buying gold and silver? You deal with clients all day long. I mean,
Yeah.
I deal with clients. I have a lot of entrepreneurs.
Yeah, entrepreneurs is a big one. I feel like entrepreneurs, simply because they kind of know the feeling of the government with their hand in the pocket, and so they're a little bit more hip to being able to take action for themselves. One of the big things I saw over the course of the last year and a half is a lot of people who are getting out of the real estate market have decided, well, I don't feel comfortable and I don't want to store cash in the banks. There's a limit on the insurance, number one. Number two, there's no interest.
There's no revenue.
There's no revenue at all. Maybe they don't want to take the risks that are out there in the stock market because it is a risk. And as well, even today, this is especially important because it's one thing to say, okay, government says inflation's at 2, maybe it's more like 6. But if I'm getting 9% of my portfolio, okay, I'm up 3. Okay, fine. But today, government says it's 3 or 4% inflation. Again, devaluing of the currency, meaning your purchasing power is 4% less. But in reality, maybe it's more like 8, or some people would say 15, depends on what you're buying. Is it lumber that you're buying? Is it groceries that you're buying? Is it your insurance? So when we look at what you're up against in terms of the devaluing of the currency / inflation, you say, well, I'm now having to take crazy risks in the market in order to cover that. Or I could do what has been done for thousands of years, just put it into physical gold and silver. Over the next 2-3 years, it's going to be a store of value. It's going to protect my wealth. It's liquid, so when I need it down the road to buy real estate, et cetera, et cetera.
On a phone call.
You sell it on a phone call, you're ready to go. So that's one thing. I see a lot of people selling homes, buying physical gold. What I love about that, as an aside, I don't even know if they're thinking about this, but that is now collateral not in the bank. That means the bank can't use that money to lend out and do other things, because when you put money into the bank, you're giving them the money, right, to use. That's why they give you 75 basis points back or whatnot. So I like this idea that owning physical gold and silver is a vote against this currency system.
Well, old school people that own real estate and are selling real estate know what they're doing. If you put pile of earth in your hand, it's worth something. Real estate is worth something. If they're getting out now, they just realize that maybe it's a little frothy, maybe we're at the top, I want to take my profit, because I've seen in the real estate business where it's dropped 40%.
And we're at that point with exuberance right now where many people think that those things can't happen
Well, when there's
anymore.
more sellers than buyers, the prices drop. It's the same thing with the stock market. Can the stock market correct itself? Can it go down 30, 40%? We've seen it before. We've seen it happen in gold and silver, but the difference is with gold and silver, it's at a bottom now where we think it can only go up. People that have made money in cryptocurrency, and I mean, the Bitcoin right now, the last look this morning, it was about $41,000. It was $80,000 a little while ago.
I watched a video, someone was making a comment saying it seems to be following the stock market, actually, acting more like an equity than a store of wealth. But I always like to say, look,
but we have
gold is money, cryptos are a currency, right? So with the US dollar, you can print as much as you want. You can't print as much as you want with a cryptocurrency. However, you can buy it in crazy fractions.
Well,
so there's another issue.
But in Kazakhstan, where they've got the problem right now, they mine Bitcoin. So there's another.
Well, they can't mine it now because the internet's down.
Yeah, but that tells you that it's going to drop because they're not mining it. But people that have made money in crypto, they're buying gold and silver from us. I mean, and diamonds. I mean, they know that you need to have an hard asset.
Speaking of diamonds, I know we only have a couple minutes left, Paul, but I showed you an Instagram post a couple days ago from the Fancy Color Research Foundation. They were showing that 1 carat vivid pink diamonds beat gold last year. They were up something like 35%. Obviously, because of the Argyle mine. What do you see for the diamond market? What I'm seeing from what I'm reading on Fancy Color Research Foundation, they're sort of talking about the same things with gold, this kind of preserving purchasing power, preserving wealth. What do you see for the for the diamond market?
For 2 years, it's been very hard to sell diamonds. First of all, nobody that is the cutters and polishers are not sending out product to their dealers on consignment. They're worried about they won't be in business tomorrow, and if you ship them a couple of $1 million, will I get paid?
Because it's a handshake business.
Yes. So, they're worried about that. The traveling, going to, whether you go to New York or whether you go to Tel Aviv or whether you go to Antwerp, you can't go and see product. And people are not coming to show you product because they're terrified of COVID. So it's been slow. But pink diamonds, since the Argyle mine closed, have shot up. As you said, Vivid, 1 carat's gone up 35%. We've got a 0.72 Vivid VVS1 on our website. We haven't changed the price on that. I'm going to be changing the price on that because it's $750,000 US. It's now,
it's $1 million diamond now.
It's $1 million diamond. Yeah. So we can negotiate on that one. But again, have some physical product, gold and silver in your portfolio.
The number 18778-SILVER and the website guildhallwealth.com. Acquire physical precious metals for your portfolio. Protect your wealth, your hard-earned money. This is about making sure that your purchasing power over the next several years is maintained or even grows, and we're very confident about that. So give us a call at 18778-SILVER. You can buy physical metals direct, diamonds direct. You can buy physical gold and have it stored in an IROC-approved vault facility, insured. It is your product, directly owned, allocated, segregated. Same thing in registered accounts. Have physical precious metals in your registered accounts. Give us a call. We're happy to talk about it and show you how to do it. That's been another episode of The Real Money Show. Thank you, Paul, for joining me. It was a nice, brisk, and energetic and passionate discussion.
It was nice to get out from under a foot of paperwork.
That's right. Thank you so much to all our listeners for joining us this week, and we can't wait to speak to you next week on The Real Money Show on Global News Radio, 640 Toronto.